Welcome to The Explainer. Today, we're tackling a massive geopolitical what-if, one that could send a shockwave through the entire global economy. We're going to dig into the data to explore what would really happen to our energy systems if a conflict ever broke out between the US and Iran.
Okay, so let's just dive right into the big question. It's a scenario that keeps energy traders and world leaders up at night. We're going to trace the chain reaction from the first few hours of market panic all the way down the line to the price you pay at the pump and for your electricity.
To really get our heads around just how big the impact could be, it all starts with this one number, roughly 30%. So, what is it?
And here's your answer. That's the share of all the oil shipped by sea every single day that has to squeeze through the Strait of Hormuz. It is, without a doubt, one of the most critical energy choke points on the planet. And as you can see, Iran's coast looms right over it.
Yeah, this is the perfect way to frame it. You see, Iran's importance is twofold. It's not just about its location. It's both the gatekeeper for a huge chunk of the world's oil supply and a massive energy producer itself. Let's just look at the raw numbers. Even with sanctions, Iran pumps a ton of oil, somewhere between 3 and 4 million barrels every day. It's also sitting on the world's second biggest pile of natural gas. So you've got this massive producer sitting right on top of this critical shipping lane. That combination makes any problem in this region an immediate global energy event.
So, let's talk about the immediate aftermath. What happens on day one, the very first hours? In any crisis, the financial markets react first. And believe me, the reaction here would be fast, it would be severe, and it would be all about one thing: price. You'd see oil prices go absolutely wild, almost instantly. I mean, look at this chart. We could easily see Brent crude, the global benchmark, leap from something like $85 a barrel to $120, maybe even higher. We're talking a surge of up to 50% or even more in just a matter of hours. So, why the huge jump? Well, the crazy part is, this initial price spike isn't even about a real physical loss of oil yet. It's almost entirely driven by fear. Traders instantly bake in what they call a risk premium. The threat to shipping, the soaring cost to insure oil tankers, the possibility of retaliation, it all sends the price flying before a single barrel is even taken off the market.
Okay, so a bunch of numbers on a trading screen in London go haywire. Why should you care? Well, this is exactly how that global shockwave travels from the markets and hits your wallet, right at home.
It's a pretty straight line, really. It kicks off with natural gas prices shooting up as countries scramble to secure supplies. Then, the power plants that burn that gas have to pay more for their fuel. They, in turn, sell that more expensive power to the grid. And, well, guess who's at the end of that chain? Your local utility passes that cost right on to you.
But here's the thing. Not everyone would feel the pain equally. Over in the United States, yeah, power prices would definitely go up. But look at Europe. Because they're so heavily dependent on imported natural gas, the hit would be way, way worse. The analysis suggests power prices in some European markets could literally more than double. That just shows you how vulnerable some regions are.
Now, with the markets in a total freefall, you can bet the world's major economies would not just sit back and watch. They'd jump into action pretty quickly, trying to stop a complete meltdown and calm everything down.
So what's in their emergency toolkit? Well, first, the US and its allies would crack open their rainy day funds of oil, the strategic petroleum reserves. At the same time, Saudi Arabia would probably crank up its own production to help fill the gap. And you'd see gas producers like Qatar and the UAE try to ship more LNG out to calm the markets.
But, and this is a huge but, we have to be really clear about something. All of these measures, they're basically just a bandage on a very serious wound. They can help stop the bleeding for a little while, but they are absolutely not a long-term cure.
So, knowing these are just short-term fixes, let's zoom out. What about the long game? Because a shock this big doesn't just fade away. It can actually act as a massive catalyst, forcing permanent changes and completely reshaping our energy future.
You can kind of see how it would play out. The first few months, that's just pure crisis management. Then, governments start to react with new policies focused on energy security. After that, you see the big money start to move, capital flowing away from risky regions and toward things like renewables and nuclear. And finally, years down the line, a whole new energy map begins to take shape.
And this brings us to a really fascinating, kind of ironic twist. What does all this chaos actually mean for green energy? Well, this quote really nails it.
When oil and gas are suddenly crazy expensive and unreliable, renewables and battery storage don't just look good for the planet anymore, they start to look like a smart, safe, and critical economic choice.
And the end result could be a future that looks a lot more like this: a world that was forced by a crisis to speed up its move away from volatile fossil fuels and toward a system where renewables and other stable sources make up a much, much bigger piece of the pie.
So we'll leave you with that final thought to chew on. It's a complex and pretty wild question. Could a devastating conflict, one rooted in the old world of fossil fuels, accidentally end up being the very thing that pushes us faster into a new energy future? That's all for this explainer. Thanks for joining.